Most of the time, the price is in a trading range, and trading within it is very difficult for us. Because when we open a buy trade, the price turns back, and when we enter a sell trade, the price moves up. But how can we turn the trading range into our strength and avoid falling into its trap? Please stay with me until the end of the video. Before we dive into the exciting topic of trading ranges, I kindly ask that if you find this content useful, please like the video, subscribe to my channel, and leave a comment, as I really need your support. Thank you. Now please open TradingView. According to the trading cycles, which we've covered in this video, the trading range is usually the last part of price cycles, where the price has no clear direction and traps most traders. Do you know why? Because it breaks upward, and traders think the price is going up, then suddenly it moves down. Similarly, when the price breaks down from below and suddenly returns upward. This price behavior drives many traders to the edge of madness. The anger that traders feel in these moments leads to overtrading. When a person overtrades, two very important things are ignored. The first is the daily stop loss. The intensity of the anger is so high that when the person hits their daily stop loss, they don't accept the loss and ignore their trading plan, which ultimately leads to big losses. The second is stepping outside their trading strategy. A person who overtrades will later realize that 60% or more of the trades they made weren't even part of their strategy. I'm telling you this to remind you how important it is to learn about trading ranges, so you're not one of these people. This is the nature of trading ranges. They constantly break from the top or bottom, and in the area where we think the price will break the level, unexpectedly, the price returns. In the first step, we need to learn where trading ranges are formed, and then we'll also learn how to trade within them. When a channel is formed in price cycles, trading ranges are usually created after channel breaks. A very important point is that one of the key signs indicating that we're in a trading range is the presence of candlestick shadows. In trends, there are usually no shadows or very few. But in a trading range, since the price hasn't decided which side to break from, unsuccessful attempts are usually made, forming candlestick shadows. This is a very strong sign of a trading range. Here's a very interesting example. This is a narrow trading range where beginner traders are not allowed to trade because they can't manage their capital properly. This is because their risk-to-reward ratio is in question. Look carefully. Do you see the shadows? From this sign you can tell you're in a trading range, and by seeing breaks from either side, you won't enter trades but wait for a legitimate break to enter. I've also explained how to differentiate between fake and real breaks in this video, so please be sure to watch that video, as it's very helpful. Now that we understand where trading ranges form on the chart, we need to learn how to enter trades within them. I can say for sure that by knowing the points I'll teach you about trading in these areas, you'll stand out because you won't fall into the trap of trading ranges and will enter in the opposite direction of those who get fooled. If you're in the early years of your trading career, try to find large trading ranges like this. We need to constantly remind ourselves that assume the top and bottom of the trading range won't break. With this assumption, we should enter sell trades at the top of the trading range and buy trades at the bottom. But with what mechanism? We can't just enter randomly. We must wait for a candle that shows a high probability that the price will move in our direction. So, as always, I'm going to introduce a few methods to enter these areas, and you can choose the one you're most comfortable with. The first method is to wait until we reach the top or bottom, and then, if you see a candle that's different from the previous ones and has a good body, enter the trade and place the stop loss behind this area. Set the take profit at the bottom of the trading range, or, depending on the stop loss, you can place the risk-to-reward ratio as 1:1 or 1:2. The second method of entry is to observe a candlestick with a shadow at the top or bottom of the trading range. Pin bars are usually the best type. Then, place a sell stop order below it so that the price activates it, and the stop loss goes behind that candlestick, with the take profit at the bottom of the trading range. The last method I'm going to mention is for advanced traders. I emphasize that if you're new to trading, just know the entry points of this method, but don't trade it, as it will lead to repeated mistakes if you don't have enough experience. In this method, we enter the trade with a limit order. When we recognize that we're in a trading range, we place a sell limit order at the top or a buy limit order at the bottom. As soon as the price touches it, we enter the trade. This entry type is one of the best entry points, as we're entering at the highest or lowest points, but it's only for professionals. The stop loss should be half the size of the trading range, so that small fluctuations don't trigger the stop loss unnecessarily. The take profit should be at the opposite side of the trading range. Now let's look at some very practical examples. Look here. Initially, if we enter a buy trade when the trading range breaks upward and then enter a sell trade when it breaks downward, it would certainly be the worst thing we could do. As I mentioned in this video, we should, like professionals, enter sell trades at the tops of trading ranges and buy trades at the bottoms. If we enter using the first method, these will be our entry points. Please be sure to take screenshots so you can review them later and let them settle into your subconscious. If we enter using the second method, these will be our entry points. And the last method of entry looks like this. The next example is a clear trading range, where we'll find entry points using the three methods we discussed. The trades where we enter with confirmation from a full body candle are these. If we want to enter using buy stop and sell stop orders, the points are as shown. And professionals can enter with limit orders. Two very important questions. Are there other entry methods? Yes, there are. But I've taught you the best methods, and once you learn these, you won't need anything else. You can even combine the MTR strategy with trading ranges, but the methods I've taught are the best ones, without a doubt. And the second challenging question, do trading ranges never break? Should we always sell at the tops and buy at the bottoms? Great question. No, eventually trading ranges will break, and we might even enter a sell trade in this area, which wasn't a wrong move because the probability of success was in our favor. Most attempts to break trading range levels fail, and what professional traders do in trading ranges is enter in the direction of this smart money. Let's assume we enter a sell trade in this area. What happens? Nothing is lost in terms of our values because we had so many profitable opportunities to use, and in all of them, at the worst case, we can take a risk to reward of 2, and overall we'll gain around 12 to 16 times the reward. In this case, we just hit one stop loss, which is very natural, and as I emphasize in all my videos, all professional traders experience stop losses, but in a managed way. So, if you entered this area and your stop loss was hit, don't worry at all and know you did the right thing with a high probability of success. You just got a little unlucky, and you'll make up for it in the future. Profitable opportunities never run out. Without a doubt, what I've taught you is one of the strongest technical concepts, which is the summary of years of my profitable and losing experiences, so I can teach them to you. Finally, here's the last example, which is a very narrow trading range. This area is only for professionals. Even they may not enter in these areas because it may not be financially viable for them. But I have to teach it to you so that the education is complete and nothing is left unsaid. First, draw the top and bottom of the trading range, and we can only enter with sell limit and buy limit orders, because there's not much movement that would allow us to enter with confirmation candles, and capital management would be questioned. Again, I emphasize that this method is for professionals who have years of trading experience and can scalp in these areas. Whether you're a beginner or professional trader, I urge you to backtest these methods first and believe in their profitability. The trading range is an area where most traders are scared to enter, or if they do, they constantly lose. But by watching this video, you've equipped yourself with a powerful perspective that will be very useful and profitable for you. Choose one method, and after backtesting, only enter with that method to enjoy the profitability. Don't forget to practice the concepts mentioned, and rest assured that everything you need to know about trading ranges is in this video. If anything is missing, I'll complete it in future videos. Thank you very much for staying with me until the end of the video. At the end of the video, I'd like to ask again that if you enjoyed the video and found it useful, please subscribe to my channel and support me so I can prepare even more professional videos for you and we can progress together to become professionals. Thank you.